And I think part of this that was really interesting to me is the way you found the college campus market. You, let's say, did things that maybe other founders wouldn't be willing to do. And so, talk a little bit about your, what was it, 6 or 12 months,
Yeah.
basically living on college campuses and kind of what you were doing.
Yeah, I mean, my whole thing is, vertical networks, right? And if you really want to get to know a vertical, you kind of have to be at one with the vertical. You have to really embed yourself. You have to really get to know it. And, I, have explained a bit of my past now. Like I barely went to college. I went to McGill in Canada, but like I dropped out. Schools in the US are very different than in Canada or anywhere in the world for that matter. And we hired, an ex, one of the founding team members of Yik Yak, which was another popular social network back in the day. But I still needed to be, I needed to be there. So I said to myself, I'm going to spend 6 to 12 months and literally go every school that we're going to launch at and speak to people. And I'm like a 28-year-old dude, just like walking around wearing like all black and like, Oxford, Mississippi. And people are like, who the hell is that guy? And because that's where we started in the South, you know?
I get the feeling that they're like, "Hey, who's the old guy dressed in all black?"
I remember like I was actually in Oxford and I was at, end of the day sitting at a bar. I was for whatever reason wearing a black hat, black James Purse shirt, and then these like black jeans with like black John Varvatos Converse shoes. And I'm in this like bar and like I was just on my phone. I look up and I just see like everyone is like it's like 80 mostly guys wearing like polos, stretch up socks, like, didn't fit in and like people were looking at me. But like, I think that's what you have to do. Like if you really care about like crafting a business and trying to understand, and you have to go there. Like I mean, did I want to be in Oxford, Mississippi, like drinking a Bud Light, surrounded by like 80 dudes named Chad and Brad, looking at me funny? Like absolutely not. But I wanted to win.
That's what ends up happening, and ultimately, what happens?
Ultimately, what happens with the business is I go out there to raise money. I want to raise a lot of money. I get offered a little bit of money, and I was just like, all right, if I'm a go big or go home type of guy, like all in. I didn't move to Silicon Valley to like not go big on this. And so I just reached out to 15 potential acquirers and got, a few offers, got the best one, and we sold to WeWork to basically power their social networking experience pre-IPO, and I joined as a head of product strategy there.
So a lot of people don't know this, but what you just said is a very difficult but wise decision for founders, which basically was, and I was privy to some of your thought process at the time, so I can cheat here a little bit. But it takes a certain amount of capital to do the things you need to do in order to take something that was, starting to working to kind of working to now, hey, you got to slam on the gas and you've got to drive that momentum to scale nationally very quickly. Right. And that's basically the inflection point you were at, but it takes capital. And so when you don't get that capital, there's kind of a fork in the road. You can either say, hey, I'll take a small amount of capital and I'll kind of do my best. Or you basically say, look, I've got deep conviction in what needs to happen here. And if I can't do that, then it doesn't make sense for me to pursue this. And by choosing the latter, I actually think it's a more responsible thing to do, right? Because you're locking in early investors getting a return and not putting a new investor's capital at risk with a plan that you're not necessarily convinced will work to some degree.
Yeah, I was like, that's exactly how I felt. I was like, hey, like if I raise an extra $3 million, I'm not sure that the market, I had to ask myself, do I think the market is going to be better in 12 months or worse than 12 months or the same? And I was like, it's probably going to be the same, like the venture environment. And when you're a social app company, you need venture capital to survive and to grow, right? We talked about in the beginning, you need to grow, grow, grow. So I was just like, you know what, if I can get a return for my investors, um, and my team, you know, everyone on my team pretty much bought houses from the outcome of it. You know, that makes me feel really good. So I think that it's something that one thing founders should do is really like understand who should, like, from day one, like, make, okay, you're starting a company, who are the 7 companies that are going to buy your company, and who are the 3 people that you need to know at that company. Call it the law of 21. How do you get those 21 people and know them from day one you start the company, so that, for us, like, selling the company was just it was just some text, right? It was like, hey, like, we're selling, hey, head of product at XYZ company, we are selling the company. Do you want to make an offer? Versus like trying to scramble for like an intro, and it's like, they don't know who you are and you don't have that trust. And that's where I see a lot of founders kind of struggle.